Good weekend all. Happy Thanksgiving and welcome. This is your agriculture update, and this is for the weekend edition of Friday, November 29th, 2019. I want to break out and tell you I'm not going to be in the office on Monday. I have a funeral. Somebody very close to me passed away, and I will be taking the day off. After that, I'll be back on Tuesday. But I wanted to come into the office and at least get this one done, now knowing that I'm not going to be here on Monday. So, in looking at the marketplace, the president did sign the bill that Congress had sent him on Hong Kong protesters' rights and how they're going to review Hong Kong. Of course, China is furious with it because it's saying the U.S. doesn't have the right to look into Chinese affairs. It's their country. It'd be almost like them passing a bill against us. The difference is we're a democracy and there's an awful lot of freedom. If you think that exists in China, So now the question is what happens with world trade, and that's going to be a big question. The oil market looked at it, and it's giving you an idea. It fell apart today. Some people say, it's the upcoming OPEC meeting. Excuse me. I don't buy into that. I buy into the gold up $9. I buy into the crude down. Is the market's getting very nervous? What did the president's signing of that bill mean? And you can see most of the stock indices were down. Admittedly, it's a holiday, but you pay attention to that. In the soybean market itself, on a monthly chart, it's taken a while. And if you think about it, this market had a high close here of 916.60 recently. And here we are back down at 876 and 3/4, if you will, right on the monthly chart numbers. When we come to a weekly bar chart, the market has been letting loose to the downside. The swing line's got a pattern of lower highs, lower lows. That is bearish. The market closed underneath the 18-week average of closes. I define bias as where does the market settle in relation to the 18-week average on a weekly chart. It's under it. Therefore, the bias is down. Where's potential support in the market? Could be the lower Bollinger Band at 830. The resistance is the 18-week average of closes at 890.5 up to the 910 and 3/4 level, the 100-week. And I say that because when the market got through that 100-week and started falling back, it started paying attention to it. And therefore, I'd have no reason to think that on the way back up, it might not pay attention to it there. But at this point, looking at the chart, momentum is measured by the slow stochastic oscillators down. The bias is down. The trend is down. I expect to see 890.5 resistance. In the meal market, it joined the parade to the downside. It hasn't done that since all the way back here. You'd have to come back in, and I'll just show you. Right through this area, when the market finally got itself up and over this 100-week average, it stayed there, and it's just made its challenge and gotten through with a pattern of lower highs, lower lows, momentum down. Resistance now, 297.40, support 283.70. In the soy oil, here's divergence. And the reason it's divergence is you've got the market over the 18-week average, so the bias is up. The trend is measured by the swing line is down. So the two fight each other, and I have nothing, and momentum's pointing down. If the market continues down, I look for support, 29.69 to 41, and resistance back at 31.71. In the corn market, trend is down. Now, I know you're going to hear, the weather's terrible, and the farmers can't get to all their corn, and there's going to be X amount left out in the fields. There will be. There's no getting away from it. Problem is demand for it. You don't really have it. And that's what you're getting. Lower highs, lower lows at this point, trend down, a lot of resistance at the combination of the 18-day and the 100-day, I said day, week. The 18-week and the 100-week moving average of closes. In the wheat market, this made a stand and went up pretty nicely. I don't quite get why, other than traders, I think, are worried that this bad storm season that we're getting, and I think there's 4 storms coming through right now, and a lot of snow, could hurt some of the early winter wheat. And the market went back to the Bollinger Band. On a world competitive basis, our wheat's just not there. When you go to the cocoa market, the market made a stand at the 18-week average, went up to the upper Bollinger Band, stalled itself out over the past 2 weeks, and is slipping back slightly. Momentum is trying to turn down here. I also have a lower low, higher high pattern. So I'm just going to call it a market that nicely took off, and it still can hang in there, but it's been a difficult chart. Sugar's been a bit easier. It's had the pattern of higher lows, higher highs on the weekly basis. That would come to an end if 1257 were to be taken out. Barring that, you've got momentum pointing up, the bias up, trend up as the swing line is looking. 1334 could be a possible target. In the coffee market, this market made its stand, and it did a nice job of it. It's got higher lows, higher highs, in an uptrend, momentum up, bias up, but it is ahead of itself. Whenever a market's over an upper Bollinger Band, the odds of it staying over that number turns out to be, on average, 5% of the time. And if you get successive closes over it, you've always got to be somewhat concerned. Well, this market finished off the week at 118.55, and the Bollinger Band's below that number, so got 2 weeks in a row up and over it. In the cotton market, you can see you've got lower highs, lower lows. Now, it's going to be interesting to see when cotton opens on Monday. How does it handle this new U.S.-Chinese deal? And what I say by deal is the U.S. signing those papers that Congress had put in front of the president. He had a couple of choices, the president. He didn't have to sign. He could have vetoed it. And then he could have let it just become law by him not vetoing it. So he decided to go with the veto. I would imagine that has to hurt the negotiations. In the cattle market, you've got higher lows, higher highs. You're in an uptrend. Momentum's locked in, still looking actually bullish. And remember, I don't use embedded readings on weekly charts, but this market's looking strong as can be. The hogs are still looking bearish, lower highs, lower lows. And I realize that everybody's looking for eventual big hog purchases out of China. But again, I'm going to repeat what I said. Signing that protester bill, as I'm going to call it, created a bit of an issue, and this market's been dropping anyways. What was, I thought, positive during the week was the fact that the USDA now wants every single packer to account for the carcasses that are being sent to China. So they're getting ready for something that they can track what's being sold, but I don't know what this meant by the signing of that deal. You put it all together, and it's interesting. Obviously, today was a very thinly traded day. As you know, I start in the morning at 6 in the morning recording a video for my subscribers. And they also get our handheld device that they get to see what it is, it plays right on it. What I'm doing for the Cyber Week that is coming up is if you buy 1 year of our subscription, you will get the charting course for free. So you can be at this one, the full subscription, the commentary only. The course $179.95. It's only going to last for a week or so. And I wish I were here for the big Monday splash on it, but I'm just not going to be here until Tuesday because I'll be out of the office. But you get fundamentals, technical analysis, and I am not bashful. I say buy here, sell there, do this. That's how I put it all together, trying to give you a picture to start your morning off. This is published before 7 a.m. Central Time, and it carries you that whole way of through the market because I'm going to cover all these different markets for you in a very specific manner. And yes, you can jump around because it's got a slide bar on the bottom if you're on our website. So if you just want metals or you just want meats, go right where you want. Again, you can go to our place. You don't have to buy the 1 year. You won't get the course, though, for free. What you can do is this starts as low as $7.95, but if you want the course and all thrown in, buy a 1 year subscription. If you need to, call my staff on Monday. They'll be happy to work with you. You can read about it or sign up for it on our website. I realize that it's not going to say it just yet, but you have my word. I'm going to honor that. IraEpstein.com under the word research. You have a good day. I will see you all Tuesday.